Opening music fades. Hey everyone, and welcome back to the channel where we demystify the markets. Ever heard of a stock so incredibly hard to borrow that short sellers are facing an annualized fee of over 700% just to keep their positions open? Today, we're diving deep into one such intriguing case, the Grow Hub Limited, ticker symbol TGHL. We'll break down why the specific stock is flagging on our hard to borrow screener, what that eye-popping cost to borrow number really means, and the mechanics behind a potential short squeeze. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show TGHL logo/chart. Let's zoom in on the Grow Hub Limited, TGHL. This company operates in the technology and software infrastructure sector, specifically focusing on product traceability, data analytics, and trading facilitation solutions in Singapore and internationally. With a modest market capitalization of approximately $22.08 million and an estimated float of 12.7 million shares, TGHL is certainly in the small cap arena. Now, when we look at recent price action, it's been quite volatile. Today alone, TGHL dropped a significant 26.23%. However, zoom out a bit and you'll see a different story. The stock was up a remarkable 43.77% over the last 5 days and a staggering 113.78% in the last 30 days. Volume today was 890,800 shares, which is notably lower than its 30-day average of 10,225,460, giving it a relative volume of just 0.1x average. So, we have a small, volatile tech company with a recent surge, followed by a sharp pullback. What is cost to borrow and why it matters? Show infographic, cost to borrow explanation. Alright, let's talk about cost to borrow, or CTB. In simple terms, when a short seller wants to bet against a stock, they first have to borrow shares from a broker. Just like borrowing money, there's a fee involved, the cost to borrow. This fee is typically expressed as an annualized percentage. So, if a stock has a 10% CTB, it costs a short seller 10% of the value of the borrowed shares per year. Now, why does it matter? A high CTB indicates strong demand from short sellers to borrow shares, coupled with a limited supply of those shares available. When this fee skyrockets, it means the market for borrowing those specific shares is extremely tight and expensive. And yes, these fees can absolutely exceed 100% annually, sometimes by a lot when demand is intense and supply is almost non-existent. Why this stock is hard to borrow right now. Highlight TGHL CTB 773.1%. This is precisely why the Grow Hub Limited, or TGHL, with its astonishing 773.1% annualized cost to borrow fee, has caught our attention. Imagine paying over 773% just to maintain your short position for a year. That is an extreme level, telling us that for TGHL, shares are incredibly difficult and expensive to locate and borrow. This isn't just a high number, it's a red flag waving to every short seller currently in TGHL, signaling that their position comes with an enormous daily carrying cost. Our internal composite squeeze score for TGHL, which combines factors like the CTB, borrow supply, float size, and price momentum, currently sits at 46.5 out of 100. While today saw TGHL drop over 26%, the borrow fee remains exceptionally high, suggesting that despite the recent sell-off, the underlying short interest and tightness in the borrow market persist. With an estimated float of 12.7 million shares, if a significant portion of those are already spoken for by existing short positions or long-term holders, it further restricts the available supply. Squeeze mechanics explained. Show animation, short squeeze process. So, what happens when a stock is hard to borrow and the CTB is this high? This is where short squeeze mechanics come into play. A short squeeze occurs when the price of a stock rises sharply, forcing short sellers who have bet against the stock to buy back shares to cover their positions and limit their losses. This buying activity, often done under pressure, then fuels further price increases, creating a cascading effect. For TGHL, with a 773.1% CTB, the daily cost of holding a short position is substantial. If the price starts to move up, even modestly, these high carrying costs, combined with unrealized losses, can create immense pressure on short sellers to cover. When they all rush to buy back their borrowed shares, it creates a surge in demand, which pushes the price even higher, trapping more short sellers in a vicious cycle. It's important to remember, though, that a high cost to borrow does not guarantee a squeeze. It can also indicate that short sellers have very strong conviction that the stock price will fall further and are willing to pay a premium to maintain their bearish bet on TGHL. Dilution risk check. Joe checkmarks, no dilution, no reverse split. Another critical factor to consider for any potential squeeze candidate is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of outstanding shares. While this can raise capital for the company, it also dilutes the value of existing shares and, critically for a short squeeze, can provide a fresh supply of shares for short sellers to borrow or cover their existing positions, effectively relieving squeeze pressure. Our check for the Grow Hub Limited TGHL found no recent dilutive SEC filings such as -1s, -3s, or 424 BS in the last 90 days, which is a positive sign. Additionally, there has been no recent reverse split found for TGHL in our look-back window. This means that for now, the company isn't adding new shares to the market that could undermine a squeeze thesis. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show TGHL chart with indicators. So, for TGHL, what should you be watching if you're interested in this highly volatile situation? First, keep an eye on that cost to borrow. Will the 773.1% CTB persist, or even climb higher? A continued high CTB indicates ongoing tightness. Second, monitor the shares available to borrow. While we don't have a live number right now, a dwindling supply would add significant pressure. Third, volume. Today's volume of 890,800 shares is far below average. A significant surge in buying volume, particularly on a green day, could signal increasing interest and potential for a reversal. Remember, TGHL was up over 113% in the last 30 days before today's significant drop. Any sustained reversal from today's -26.23% move, especially accompanied by heavy volume, would be a key indicator. Also, keep an eye out for any news specific to the Grow Hub Limited's business operations, such as new contracts for its product traceability solutions or data analytics offerings, as fundamental catalysts can always ignite price action. Final graphic, TGHL summary. The Grow Hub Limited, TGHL, presents a fascinating case study with its exceptionally high 773.1% cost to borrow. This level of expense for short sellers is rare and can signal a powder keg, but it also reflects a fierce battle between bulls and bears. While a high CTB doesn't guarantee a squeeze, it certainly puts short sellers under immense pressure, especially given TGHL's recent volatility and small float. Always conduct your own thorough due diligence, understand the significant risks involved in trading volatile small-cap stocks, and never invest more than you can afford to lose. If you found this breakdown of TGHL and hard-to-borrow stocks insightful, please hit that like button, subscribe for more in-depth analyses, and let us know in the comments what other stocks you'd like us to examine. Thanks for watching, and we'll see you in the next video. Our music starts.